Okay, so you can't keep going into the bank, walking into these banks, walking to these lenders as a dummy. We can't allow ourselves to continue to be bank dummies. When you're walking into banks, when you're talking to mortgage lenders, you have to have foundational and fundamental knowledge. So, when you are going through the home buying process, right now everybody's panicking because of interest rates. But you have to have a fundamental understanding of interest rates when it relates to mortgages. Your mortgage is being sold. If you go to a mortgage broker, if you're dealing with a mortgage lender, your mortgage is being sold. MBS, mortgage backed security. Mortgages are turned into bonds. Your debt is being sold. That controls the interest rate you receive. How so? Okay. When you're dealing with a mortgage broker, because everybody has a belief that going through a mortgage broker gives you a cheaper rate. Be careful with that. Because your mortgage broker gets a spread. It's called a yield spread premium, YSP. Meaning, if they sell higher, they get a margin, a profit out of it. Okay, let's deep dive then. Mortgage-backed securities, bonds, mortgage bonds. You know how homes have a median sales price? That means this is the average. Is you can equate it to like it's the equilibrium for home pricing. Well, mortgage bonds has the same thing, except they call it par, coupon, discount. So that par rate, that discount rate, that coupon rate, generally is 100. 100. And so if you take out a mortgage on a $200,000 house, let's use that, $200,000 property. Forget what we're using it for. You just want this $200,000 property, so you take out the mortgage for it. Go to a mortgage broker, you go to a lender, you get that $200,000. Your mortgage now is grouped in with every other borrower who came in for that a $200,000 property. And that group of mortgages, yours with the thousands, tens of thousands, hundreds of thousands of others, is being sold at a median or par rate. So 100 is the median. That's the par. That's the discount. That's the coupon. Now, this is where you come in, because you have to be attentive. You have to be aware. If that rate for the mortgage bond goes above par, you will get, what do you think? A higher or lower interest rate. If your mortgage broker, if your lender is actually making money, they'll be incentivized to give you a lower rate, a lower interest rate, but it's still up to their discretion. So instead of getting a 7%, a 6.5%, you might just get a 6 or a 5.5. But If that par level, that discount level, that coupon rate, that median rate goes below 100, what does that mean for your mortgage broker, your lender? They are losing money on the mortgage bonds they're selling. So in order to make up for it, guess who gets charged on the front end? You. Your interest rate becomes higher because the mortgage-backed security, that median rate, that par rate, that coupon rate, that discount rate is below the main level, the level that everyone, all investors are comfortable with, 100. So you have to pay attention to what's happening with mortgage-backed securities, because that dictates the interest rate you will receive. Now, along with that, you have the 10-year treasury. So you have to pay attention to both, because that's where investors are swaying. Institutional investors, they sway to mitigate. That means just to reduce their risks. But you can't keep going into the bank. Can't keep going to these mortgage lenders. Dummy. Don't be a bank dummy. Know why you're getting what you're getting. And know when to take advantage. Know when to close on your opportunity. Treat it like sports. This is a game. But when you see an opportunity to score big, you gotta take it. But know your mortgage is being sold in a batch of hundreds of thousands of other mortgages similar to the amount you borrowed. But you have to pay attention to the par rate and know that your mortgage broker is giving you an interest rate based on if their company, their operation is going to lose money or make money. Because they need more money to lend to more people. And they raise that through the investors who buy the bonds, the mortgage bonds. So when you're talking to your broker, your lender, you don't have to let them know you know what you know. It's up to you to take advantage of them at the right time. But don't let them just swindle you, finesse them, because you have the common fundamental knowledge. Don't be a bank dummy.